But let's roll into our first segment here. We have the broker buzz. So
God.
top discussions of the week in Brokers Are Best Facebook group.
Tommy, are you on the moderation in there?
I am.
Okay.
I am.
Guys, it's crazy.
It's wild.
I'm not going to talk about it because of my title. No one believes me. But Tommy, can you just tell people how ballistic this thing is? It's insane.
Yeah. So I've only recently gone back onto moderation. So my learnings are limited, but while I was in there, there's a lot of discussion. There's a lot of stuff going on. And so we pulled out the top three uh most common discussions that were going on. And so let's get into them. The first one this week is the director of the CFPB was fired. What are the good and bad things that could come from the CFPB going away?
Nothing like a recorded video of me talking about the CFPB to be used against me. Fantastic. So much. Look, I posted about it. Here's one. Everybody needs to take a step back first and foremost. Okay. Like just take a step back. It's not shut down just yet at the moment. They have paused everything. So the CFPB director was fired. Everything is currently on a pause. So anything that they were potentially auditing, anything that they were doing work related has been absolutely halted. There's multiple emails verifying that. So we know that for a fact. We also know that the director was fired, and I do believe somebody else was recently appointed. I don't know if it was yesterday, but I think I just saw some news recently about it. So good or bad thing, like everything in life, there's good and bad. And you guys are going to hate my political answer, but I really feel this way about the CFPB. I really, really do. We can't sit here and pretend that there wasn't good that came out of it. That is an absolute lie. You can see the data. There was billions of dollars that were given back to consumers that were truly taken advantage of. Be very clear about that. The other aspect of it, though, is you can't really ask the CFPB questions. You can't really talk to anybody there. You haven't been able to do that. You can't really look things up. There are certain things that are gray that people want answers to. And what happens a lot of the time is they would come in and just audit you and say, okay, here's your fine. But for the longest time, I can't call or do anything. And then what you find with the CFPB and a majority of it, and you can go look, they're looking at people that have a lot of money already. And I understand. You might say, well, John, that's the only people that can pay. I'm fair. But in order for them to get to that point, they had to do a bunch of stuff along the way that put them in the position to have all that money. So having the opportunity to even look at the ones that are on the smaller level that end up turning into these big companies that pay these large fines, there wasn't any oversight really for that. There were small cases here and there. So we do need reform. We do need change from that aspect as well. There are bad apples. I don't think bad apples are going anywhere, regardless of your industry. I don't just mean mortgages, y'all. Doctors, attorneys, you've seen the documentaries, you've read the stories. There are bad apples, unfortunately. I do believe most people have good intent. But I am hoping that there is a reform that comes from this. And in the event that it does go away, let's just say that, Congress, it passes and the CFPB is completely shut down and there's no longer around. Everyone's, what's going to happen? What does this? What the reality is, it will move to the state level. So the states are going to have to start imposing specific fines. I start thinking about states like California, New York, Florida, several others that already have more red tape than even the federal level when it comes to consumer protection. Particularly California and New York have a tremendous amount and even more fines on top of whatever it is that's done at a federal level. So it'll move to the states. The other thing that's fascinating, if this does go through, there's a lot of conversations that it might move to the GSEs, which means Fannie and Freddie would get involved in basically creating uniform across the board in terms of what is or isn't acceptable, which I don't think is a bad thing either. If they're saying, look, here's the black and white for us. Here's what we need you to do. Here's what happens if you don't do it. I really think it's important people understand the severity of the consequences for not protecting the consumers. They are the most important piece. I'm a first-generation Middle Eastern American. All right? I saw the loan my dad got. All right? I saw she shouldn't have got the loan. All right? So I know there's bad apples out there. I understand it. I've seen it firsthand. I saw the documents my dad closed on our house. many, many years ago. So we do need the uniformity. We do need to make sure we are protecting consumers. But the last piece I'm going to leave you with is this. Yes, it's important to know what's going on so you can be educated. And it's important to educate your consumers if they ask. Because in the event that something does occur, you want to make sure you have all your facts right and you want to make sure you can articulate yourself correctly. But last but not least, the most important thing is you still owe a duty to your consumers to stay focused on the task at hand. And that should be your only focus right now. You can't control what's going on. Doesn't mean I'm not saying don't stay close. I'm not saying don't go vote. I'm not saying don't go write letters. I'm simply saying that don't lose sight of your mission, which is to protect consumers like you've already been doing. I look forward to hearing more about this. I am keeping a very close eye. I've had a lot of very deep conversations with people close to the matter, and we'll continue to let the group know. But we're not gonna run scared. We're not gonna be nervous. We're not gonna sit there. Like, we're gonna be focused and we're gonna be ready to go. And whatever changes happen, we are ready to move with those changes.
Yeah, I mean, you said it. Education is everything. Like being on top of things, being able to provide that to your
Let me ask you.
customer. Yeah.
I mean, honestly, I'm curious. When you don't do mortgages, obviously, right? You've been on this side of things for quite some time.
Yeah.
What when you read it now, like, because you see it, obviously, you see it now because in the Facebook groups, you're working with loan officers. You have been for many, many years.
It's made its way into my YouTube algorithm. It's everywhere.
Do to you, like, when you read it as somebody that's not in the mortgage game, do you have fears as a consumer? Do you have, like, what actually happened in your head, or where you're like, honestly, John, I really wasn't that big of a deal in my head, but I don't know everything about it?
I consider myself kind of blessed in that situation. I was able to get my house at a couple years ago and locked in a really good rate, and so I am feeling not stuck because there was no intention of leaving anytime soon. But if I was to move or have to move, then I would be more concerned. But it's one of those things where I'm blessed. I have the house. I'm fine. I have no need to move. But I'm talking with a lot of friends who are in that position of trying to buy the first house, and they're just like, the goalpost keeps moving. But
The will move. Now, do you think that has to do with the CFPB, or
no?
What is your take about the CFPB specifically in terms of what you read or saw?
That it all kind of went over my head.
It is. So you see
that stuff. Like, this sounds important, but
and
from
that's
that level.
Like, I talked to my wife about it. Like, even my mom, and because that's how I kind of gauge a lot of the times. You know, my wife knows obviously more because she's with me all day, and this is all I live and breathe. But like, and I don't think that's a bad thing. But for those listening, you know, Tommy is close to it. He understands it. You know what's going on. But even you're like, I'm not sure exactly how this impacts me.
If I was supposed to answer the question you just answered, no.
And that's the thing with the broker community. Most of your consumers are in the exact same position. That's not a bad thing, Tommy. Like, I'm glad that was the answer. Just to
yeah.
I'm like, okay, we're putting so much more of an emphasis on it than our consumers are. And to your point, I'm not saying don't be educated about it, but consumers don't really know what this means for them. That's just the reality. And you can pay attention to this for loan officers out there listening. Just when you're talking to them on the phones, because you do every day, and what I do with my teams, I always talk about, hey, what are they bringing up in the political climate right now? I always ask that question. I'm just curious. They talk to more, people than I'm doing right now, but we always have that discussion every single week. Like, what's going on? What's the political climate? What are your consumers concerned with? This hasn't been brought up. There have been a lot of conversations just about the new presidency, which that's totally normal whenever this happens and there is an election and a new president comes into office. But they're not talking about the CFPB. They're not talking about those specifics. So just pay attention to what your consumers are saying. Be smart with how you educate them.
Yeah, absolutely. All right. You ready for the next one?
I'm fired up right now.
All right. Let's go. What's a fair price to pay a processor that handles a file for you from start to finish?
Of course. All right. We have a lot of third-party processing companies that are part of AIME. We love you. Okay.
Processor committee is listening, John.
All right. Listen, there's multiple ways to do this. Number one, there's many companies out there that leverage third-party processing. For anyone else listening that might not be a loan originator, maybe you're an agent, maybe you're a consumer. Third-party processing companies, they have to also be licensed to be able to do a mortgage in the state that we need them to process a loan in. So if I'm licensed in Florida, for example, but I live in Michigan, my processor, if I'm doing a loan in Florida, must also be licensed in Florida if they're a third-party company. The other thing with a third-party company is the cost is passed on to the consumer if the loan closes. So for third-party processing companies, you're seeing prices between, honestly, I'm seeing $5.99 per deal all the way up to $12.99. And a lot of it has to do with what you want them to take off your plate. There are some third-party processing companies, they'll register the loan for you. So for real estate agents, consumers that are listening, that means they're going to make sure that that file goes to the lender appropriately, and it makes sure that all the numbers are correct, make sure that your file looks perfect, and it makes sure that it's registered the right way with the lender. They make sure that the rate is locked properly. They basically take that loan from start to finish and get you to the finish line, and they help the loan officer stay front end focused, which is what we're supposed to be doing and great at doing. I believe that's a very fair price, and a lot of the price negotiations have to do with what you want them to do. So $5.99 to, I believe, $12.49, $12.50 is the most I've seen, I believe. That is more than fair, in my opinion, for what they're doing on third-party processing, depending on what they're taking off your plate. But ask them questions. We have so many great ones as part of AIME. Go out and ask them. And you might be saying, by the way, I'm the biggest believer in processors. Biggest believer. I am a type A personality, high producer that didn't want anybody touching my files like so many people I talk to, thinking, oh, only I can work these. It's not true. If you want to do more business, you need somebody that can handle your back end for you. I was in retail for 6.5 years. My team was doing $1.2 billion a year with 12 people every year. And we did it by not touching our loans in process, just a couple touches here or there. It is a real thing, especially for mortgage brokers, if we want to gain and get to 51% market share, which is our goal. So yes, $5.99 to $1,200, $12.99 is more than fair. Have the conversation. Now, the other aspect is you can have processors internally, which means you put them on W-2, and then a lot of the structure, if they work for you directly. So they're not a third-party company. They work under me. They don't have to be licensed, but they can't talk rates and fees or terms or anything like that legally. For them, what I've seen across the board is a salary and then a bonus per file. That salary I've seen range, depending on the state that you're in, from $45,000 all the way to $75,000. I've truly seen it. And the per file fees I've seen between $50 and $250 per file. Your top processors, in my opinion, can handle 25 to 35 transactions, right in that range, comfortably every single month. But processing is going to be a huge, huge piece of the broker channel growing. I can guarantee it. And by the way, if you don't believe me, you're out there, you're a skeptic on what I'm saying, do me a favor, go find every top producer. Go find the top 100. I don't care if you go find the top 250. Call them. You ask them if they deal with their loans from start to finish. It's going to be very rare out of the 250 people that you find many of them that are doing everything by themselves every step of the way. So that should tell you all you need to know about the importance of processing.
More hands, more work, more.
I mean, you bought your house in what,
21?
21? Okay.
Yeah.
But when you bought your house, do you remember the process by chance?
Very little.
Okay. It
was a lot of phone calls. It was a lot of, I don't remember talking to a processor.
Okay.
But I remember talking to the broker, and I remember talking to the real estate agent.
Perfect. You know, it is a big, important piece of the process, right? I don't know who handled your loan, nor should you say it live, just to be honest with you.
No.
But it doesn't matter. The point of it is, what was that process like? They got you to the finish line. How can you get to the finish line more effectively? The other thing for processors, for loan officers out there, I have really great relationships. I have a few people that they handle my business now, especially as I'm in the role that I'm in. The amount of time I've gotten back with my family, and I don't have a lot of time anymore to spend, but getting someone you trust is unbelievable what it does to your mental health. It really is. Like those Saturday calls, where you're with your family and you have to take the call. Like you get it and your family gets it. My wife understands. She's been with me long enough and knows the industry I'm in. But getting someone like that you can trust, that's an absolute monster that can take a call for you. Oh, my anxiety, the loan anxiety, y'all, has gone down drastically. So pay attention to it. Go reach out to third-party processing company. AIME has so many of them. We'd love for you to check in with them. It's going to be very important for your business.
Yeah. Time is money, but also time is valuable. Time is precious. And so it's money, but it's also worth something.
Well, you know what? It is. And like to give it, you know me, man, I love driving the points home, especially just so given the perspective. This podcast, for example, okay?
Yeah.
How long did you spend putting everything together? Honestly.
Dozens of hours.
Okay. Dozens of hours. Do you think I trust you?
Yeah.
Okay.
100%.
You think I trust you?
I do.
And you're right. I do trust you. So when you brought it to me, what did I do?
Trusted me.
And?
Said yes.
Did I change anything?
No.
No.
I don't think anything's been changed really.
No, it hasn't. And you know how much relief that is for me? And now I'm doing something that I love to do.
Yep.
That required me trusting you. That required me letting go and saying, okay, I've talked to this guy enough. I trust him. I think he knows where my vision is. I think he knows what I like. We've talked enough about that. So, all right, let him run. Let's see. And that's what you did. You ran. I looked at it. I said, dude, this is awesome. And it's the same thing for processors, y'all. Let them run. They might do something you don't like up front. You just coach. Hey, here, brother. Could you change this for me? Do you mind doing that? Can you fix this for me? Can you update this? But if you don't at least let them try and let go, and you're just hovering over them, they're not going to be able to show you what they can do. If I would have sat there and hovered over Tommy and said, oh, no, you got to make sure I don't like this. Can you change this script? He's not going to even be that excited to want to put this together for me. He's going to jump on this call and go, God, all right, here we go.
Here we go again.
That's it. You've worked in this industry long enough. Is that a fair statement for me to make?
Oh, yeah. And I honestly, I think the trust is, and allowing me to run is what's going to make this continue to happen. Exactly like you said, it's going to motivate me to keep going. It's going to motivate me to want to keep doing it, keep piecing things together. And I think it's going to turn into something that a lot of people can benefit from.
And it's, brother, it's the same thing. I swear to you, with probably people don't get it. There's no difference.
No.
And I wasn't always like this, and I'm still getting better. I am not a great delegator. I am getting much and better and more improved. But here's the truth. Guess what? There's a lot of people out there that happen to be better at things that you're not that good at. And that's okay. As much as I wanted to be the person assembling and putting the plan, guess what? I'm not that good at it. You know what I am good at? This. I'm great at having conversations. I'm great at making people feel good. I'm great at, moving a direction. I'm great at sales. I'm really good at that stuff. So spend time on that. So I'll leave it at that. I didn't want to drive that one home.
No, absolutely. We'll drive it home at the end. We got takeaways to talk about at the end. But moving on to our final question for Broker Buzz, we got brokers are losing to arms from retail banks and credit unions. Why doesn't the wholesale channel have competitive options to compete against them?
Okay, so this is really easy. All right, there is it's called a yield curve. Okay, and when the yield curve is inverted yield curve, right? It's going under. What happens is that means the cost to borrow money, right? Like short-term money is much more expensive up front. So it throws out arm pricing. So why does that happen? Well, basically, the investors are saying, okay, well, if the 30-year fixed mortgage right now is, let's just say 6.99, and the arm rates are, let's just say 6.5, they're basically saying, why would we pay so much more on an adjustable rate mortgage when we know the likelihood the client refinances into a 30-year is unbelievably high because we expect rates to come down at some point in the near future. So again, logically think about their investment for a second. Think about it. If an ARM and a 30-year are very close in interest rate, and we are anticipating rates to come down, investors aren't going to pay us on arms that they believe will be refied within 6 months to 18 months. They're going to lose a lot of money that way because why? People get fearful of arms. More importantly, salespeople, unfortunately, there's a lot here that scare people with arms. I have an arm on my house, just to be upfront with this group here. I have a 7-year arm that I took. I got a 1.99 interest rate on my 7-year arm. It made sense for me. Okay. It makes sense for a lot of people, but right now the pricing isn't there. Credit unions and some of these banks, why can they do it? What they're doing is they're leveraging their own money. They're leveraging their own money and they're basically handling it and keeping it as a portfolio loan. So imagine a credit union. Credit union is made up of member money for the most part, right? Members are putting in money and that's how they're running the credit union consistently and constantly. So let's just say you have $500,000 with a credit union and you go to the credit union and, hey, I'm looking for pricing. I'm looking for a loan. They see you have $500,000. So they go, okay, you have $500,000. We know rates are higher, but we have a portfolio loan based off your assets that you have with this bank. Keep your assets here with us. Please don't touch anything. Leave it alone here. And because you leave your assets here, we'll give you a 0.5 point off of your rate on an arm. So they're getting a 5.75 at 0 points versus our 6.5 or 6.75, whatever the case might be. Why? Number one, they have the collateral. They have a lot of the money that is already in there from their members and from the person that's doing the loan. But number two, they're building their own portfolio loan. It's similar to how UWM is the 90% cash out, right? That's not Fannie, that's not Freddie, that's a portfolio loan. So they'll allocate X amount of dollars. Let's just say they say we're going to allocate $100 million this year towards pricing like this. So that's what's allocated. It's approved. And then they give it to certain clientele and certain people that have the opportunity to keep it. It also keeps them a very lifelong client. That's why you lose a lot of jumbo loans right now, very similar to jumbo loans. A Wells Fargo or Chase, if they know, let's just say the jumbo rate right now is 6.5. All right. And it's $1 million loan. But Wells Fargo says, okay, I know it's 6.5, but how about you pay us 5.5? Because one, we want to earn your business. I'm doing you a favor as a client, but you're still paying me 5.5% on $1 million and keeping all your money with me here. You're keeping your assets with me. You're keeping your house. We know the likelihood you refinance again is very high. So we're not going to see much changes on our end until we see the yield curve get out of the inverted that it's in right now. That is going to take still more time. I was hoping we got some kind of love here soon, but inflation numbers and the reports are higher than anticipated, which we kind of felt that coming with the policies and the changes that have been put into effect. So ARM rates, they're still not here. Credit unions, banks, that's why they can do it. It's not for everybody. If your consumer's telling you, oh, I have this, I have that. I mean, you got to have a pretty strong profile and you got to have, for the most part, pretty significant amount of money in the bank in order to take advantage of loans like that. But if they do, we had a client the other day, had a lot of money with a certain investor, won't mention a name. I told him to go check with their investor. I said, hey, look, I got to do you a service. It's just important you check. They gave him 0.5 point lower than I can give. It didn't make sense for me to do his loan. It just didn't. So just be cautious, be aware, be understanding, and educate.
Absolutely. No, that's awesome. Yeah, there's this is another thing that just went over my head and wasn't quite sure.
Let me make sense the way I explained it.
Yeah.
Okay.
No, oh, it made sense the way you explained it for sure. It was one of those things that when we were gathering the questions, I was like, I'm not too sure on this one. Mm-hmm. So awesome. But that's it for our broker buzz this week.